Hello and welcome. You're watching the newsroom right here on ET Now. I am Ajay Sharma. The markets today seem to be digesting the gains made in the last couple of trading sessions. There have been a furious rally. So record highs and digesting the gains. They're not falling off the cliff. In fact, if you look at the composition of the market, Reliance is clearly gaining for almost a week now and 1.5% helping the market overall as well. At the same time, technology stocks are coming back. There have been commentary coming from Infosys management in a couple of global brokerage calls. They have been doing investor calls. Also last evening, TCS annual general meeting also saw Rajesh Gopinath and Chandra commentary, and analysts have gone very bullish on it. So that is actually leading to a big set of gains coming in from TechM, Infi, HCL Tech and TCS among the big gainers. But the big story is the strength in the market. And bulk of the strength in the market is actually also coming from Tier 2, Tier 3 cities, far and wide beyond the traditional centers like Mumbai, Ahmedabad, etc. And we saw Ashish Chauhan also corroborating that data. Some others. Today, ICICI Security was also there on our channel. So we thought of getting you somebody who the pedigree of the group actually has got very good grip on the length and breadth of the country, especially in the rural side, the Tier 2, Tier 3 side. I'm talking about the Mahindra Group and Ashutosh Bishnoi of Mahindra Manulife Mutual Fund joining us today. Ashutosh, good afternoon. Thank you so much for your time. Let's start by, the data which shows the BSE data recently came out showing that far off states, which were traditionally not very spoken about as far as stock market inclination or tilt is concerned, is seeing very good penetration, be it mutual fund folio addition or be it demat account addition. What are your thoughts on, this phenomena of investing going far and wide? Also, mutual funds, of course, have played a very important role. But the data is speaking volumes. What are your thoughts?
Thank you, Ajay. I think the data is actually spot on. The direction we are moving in is widening the base of the equity culture. I would say rediscovering. 30 years ago, we had a very strong equity culture with 27 stock exchanges across the country. We're going back to that kind of a base. Of course, not that many exchanges, but customers and investors coming from all over the country. Now, there are two reasons for this in the current context. In the immediate context, the reason is that in the smaller cities and far out into smaller towns, taluka and districts, really speaking, what are the alternatives? Where should an investor put his money where he can see growth coming to his investments? And, you finally you stop a halt at deposits. And rates being what they are, is clearly the investor is looking for alternatives and is finding many alternatives in the mutual fund domain. So we are seeing mutual funds going into a big rise in that area. And then there is the young population, the young working population that wants to get online and invest money just like they buy everything online. And that's been a really large entry in the mutual fund as well. So it's coming from many sources, but the driving theme is I need to put my money somewhere where it can grow. And especially in times of concerns that we have been living through in the last year and a half, you want your money to do better than what you have been doing with yourself. You may have been getting a lower wage. Maybe your livelihood is a little bit under threat. Your job or your shop is not getting enough customers. You want to make sure that your money is deployed in a way that it can do its best. And therefore, we are seeing it coming into the equity markets, either directly or through mutual funds across the country.
Right. Ashutosh, what are your thoughts on this argument of, this time the COVID wave has hit the rural part of the country in a very big way. In the first wave, it was insulated. You have your ears on the ground as far as the rural side is concerned, thanks to the parent, and otherwise too in the industry. Tell us about this argument which keeps coming up that the real economy and the market are completely disjoined right now.
Ajay, there are two issues here. Number one is how much is the rural countryside affected by COVID, and does that have a significant economic impact? One of the things that you need to think about, and we've been talking to a lot of serologists and experts in disease, and their view is that this second wave has been a very sharp curve. It's come and gone very quickly. Yes, it may have reached out deeper, but that doesn't mean that it's lingering there and killing people and killing economic activity, which is pretty much we've seen at the peak. It did appear to be very bad. It was, in fact, it took a bigger toll probably, but it's not the kind of thing that's lingering on, and therefore, whatever impact we see is what there is. There is no hidden impact waiting to come. Our view is that with monsoons looking the way they are, which is pretty good, and with the government increasing the capital expenditure in infrastructure, which directly affects the job status in rural India, rural India is all set to make a comeback in whatever people may have calculated in April as being the damage that could be or may be done. I think sitting now in June, we are saying, well, maybe we overestimated the damage. The wave is contained. The economy in the rural side, it took a hit during the time, but it's very strongly coming back. So the concerns may be overstated a little bit. The government action has been very quick in containing it. And if we continue to see execution on the intent of getting adequate number of people vaccinated by September, as the finance minister very clearly has laid out an objective, and we think it will happen. We think economically, from economic activity point of view, whether it's rural or urban, I think we are pretty much on a good track.
Right. In fact, why go far? M&M itself toned down the market expectations as far as tractor growth is concerned. So who knows how things actually could rebound. Ashutosh, talk to us on flows. Both flows into the mutual fund industry, because that's also a reflection of what retail is feeling, and also flows into the market from FII side. Now you have a good handle on that, Manulife being your partner. How's the situation looking on flows?
We did very well during the flows as Mahindra Manulife, even during the time when in the last 5 or 6 months, when equity flows were negative for a while. We actually continue to get it partly because we are in the geographies where we are in the smaller markets, where people didn't have many alternatives. But overall flow, if you speak about, we have seen a strong bounce back, particularly in the SIP space. And people are willing to try new things. And therefore, NFOs have attracted a fair amount of money, particularly you see fund of funds investing money outside India. That's very, very interesting development. It's the first time we are seeing a sustained interest from retail investors in taking their money outside India, probably because they have begun to understand that you can also make money somewhere else while the domestic market is doing extremely well. Why not put a few of your eggs in another basket? So we are seeing that. From a global perspective, I think the tide has just turned. Even as late as a couple of weeks ago, we were all talking about how the FPIs have pulled their stakes and they're moving out, and we don't know where this wave is going, how bad it will hit. But clearly, the situation now is a little different. We are being told by the experts and scientists that the next wave is a minimum of 6 months away, or maybe more. It may not even happen in the same intensity. But you have at least a 6-month clear window of building economic activity, which is actually the best time for this country, right? Between June and December, or let's say if it extends to June and March. This is the time economic activity picks up. And if you build it out right, and that's what a lot of FPIs are seeing, and their home situation may be a little different, because in the Western nations, from where the FPI comes, the Delta variant hasn't really struck yet. Hopefully it will not strike. I'm not saying it will, but a lot of experts believe that if it did, well, are they adequately prepared? And therefore, if I was a global investor, I would put some of my eggs clearly back in the emerging markets like India, which is what is happening. You see money coming back. And therefore, I think what we are seeing in the marketplace is getting ready for probably another run-up. 2 months ago, a lot of people were negative on that, and they were saying, no, I think this is it. International money is not going to come. I think the situation is now changed. we're looking at a clear run for the next few months where money may come and will come if economic activity begins to rebuild as fast as we are seeing it coming back.
Right. That clearly seemed to be the case. Ashutosh, thank you so much for your time and sharing your insights on the market. Let's take a short break on that note. On the other side of the break, the IPO street is hotting up. We'll get yet another management and we'll analyze other stock moving ideas for you. Don't go anywhere.